winter coming, investing while valuations soar. So Leena Rao is going to head that up. And please welcome to the stage Shana Fisher from Highline Venture Partners, Lilly from Greylock Partners, Alfred Lin from Sequoia, and Bijan Sabet from Spark Capital.
Got your beardy picture up. It's a good picture.
Thank you all for being here. So we're here in New York. I'm really curious, do you guys think that the New York City tech ecosystem is growing? We'll start with you since you're closest.
Yeah, since I live here. Definitely. I mean, people forget how established the Silicon Valley ecosystem is, and comparatively speaking, how young the New York ecosystem is, and there's definitely big differences. There's not some of the incredible talent that you can find in California. There's definitely not the later stage investors as much, but there's no question in the last 10 years, the New York ecosystem has grown and is still growing.
I mean, Alfred and John, both of your firms don't have offices here. Any plans to open one, or?
Not for us. I mean, we're a small office in Silicon Valley, and we tend to invest everywhere in the world. Until we invested in Tumblr, for example, but I don't think we'll open an office here. I do agree with Shana that the talent ecosystem is getting better and better. But you really got to remember, like, the roots of Silicon Valley go back to the 1930s and Hewlett-Packard and Fairchild and Intel, and it's just built on layer and layer and layer. And some days that's a feature, and some days it's a bug. But the talent ecosystem is such a robust thing in Silicon Valley. It's just going to take some time for New York.
Yeah, we don't have any plans to open up a New York office either, but we do invest globally from our Menlo Park office. So, in terms of New York, I want New York to succeed. I grew up in New York. I love New York, and I think it is definitely, the ecosystem is definitely growing. I think one challenge for New York is there's too many distractions. It's a fun city.
What do you mean, like just distractions of going out, or?
Yeah, you got lots of things to do, and also I think it's an city that has a lot of diverse industries. People have different interests. One other thing that I think is a distraction for New York is that good engineers don't necessarily have to work in tech. They can work in a hedge fund, they can work elsewhere, and I think in Silicon Valley, you kind of have to work in tech if you want to work, if you're an engineer.
Yeah, look, I'm proud we have an office here. I grew up here. I think about 40% of our investments are here. I hope that continues. I love this place. I think we started Spark in 2005, and we've been investing in here since then. And, that was pretty, different in 2005. I really feel like the patina working for a Wall Street firm as a great engineer is, like, gone. I think in the whole, financial downturn, like going home to see your family at Thanksgiving and saying, I just got this great job working for a Wall Street bank, like that doesn't have the same ring to it anymore. It's way cooler to work for a place like, Tumblr or Etsy or, somewhere else than to go work for Wall Street. So I'm really excited about what's happening here. I think, it's younger than Silicon Valley, but it's great. And the funny thing is, I was at a dinner last night, and somebody was saying that San Francisco has more distractions because, the weather's nicer. And, it takes like, an hour to get out of the fucking elevator in New York. And so you're trapped in your office. And so it's funny to hear Alfred say there's more distractions here. But, we just went through like the polar vortex. Like everyone just worked. You couldn't do anything.
That's true.
You mentioned the lack of later stage capital.
Yeah.
I mean, do you think that's local to New York? Do you think that actually makes a difference when it comes to?
Well, it makes a huge difference. I think one thing it does, there's certainly a lot of early stage capital everywhere, so that's not a problem here, it's not a problem there. What there isn't here is quite the number and tiers of like A, B, C kind of like investors. So the breakout companies want to go to the West Coast to raise capital, and only a few of them are going to be able to. So I think that, one thing that California definitely has that I've seen the trajectory companies can have is just it's much faster there. The time it takes to build a company is still the same, but the fundraising you can do there is just much more robust than what's available here. So a lot of people go there once you get past the A, and that just creates the ones that break out, the ones that break out.
Yeah, but I would say it's not just capital, not just later stage capital. I think it's mentorship and people who have been around. You know, my partners Reed and Anil have built LinkedIn and worked there, for example. It's just helpful to get mentors who have been there, who have scaled it all the way up. And there's just a lot more of those guys in Silicon Valley. I think it will happen over time in New York, but I think everybody thinks that.
What about the acqui-hire market? I mean, do you think that that's, I mean, there's not as many as there are, like the Googles and the Facebooks and the Twitters and so on and so forth in the Valley. Do you think if there was more of that here, it would grow more, or there would be, you know, more sort of people going into the industry?
You know, I don't know if this is a controversial thing to say. I think the acqui-hire market here is healthier than it is in Silicon Valley. I think that in Silicon Valley and San Francisco, that it's so prevalent and it feels so safe to start up that I think a lot of people are starting up who might not be, you know, in it for the long haul. And my sense is that New York entrepreneurs are more, you're playing without a net, and I think it's better and healthier overall in the ecosystem.
Look, I mean, as for advice for entrepreneurs in New York, I would just say play to the strengths. The market will catch up with. If they're good companies, you know, whether the investors on the East Coast or the West Coast, you're going to get noticed. We're going to find you. We'll want to be investors and want to be partners with you wherever you are. And New York is certainly a growing scene. I think New York has a ton of advantages, right? You have a very diverse population. It's a city. More and more people are moving to a city. Mobile applications are much more interesting when there's a dense population. There's a lot of applications that make a ton more sense in a city like New York, for example, Foursquare, than, you know, where, you know, our offices are on Sand Hill Road. You just don't get the density of people checking in. So I think
it's because there's no cell phone signal.
no cell phone coverage. All VCs checking in. You can see Alfred check in.
But look, so you live in New York, you happen to be in New York, you're not moving, then just play to the strengths of what New York has to offer.
Do you think VC has to be a local business? I mean, I know, like Don Valentine used to always say, you know, you should be biking distance from your company that you're covering. Do you think that's the case? I mean, Bijan, you know, we're on the board of Twitter, and you live in Boston, and you know, we're one of the earliest investors there. So
yeah, I mean, I think it definitely helps from a personal lifestyle point of view, because, like, you know, leaving my 3 kids and getting on a plane, you know, is not awesome. But in terms of like being a service to the company, I don't feel like we're not being a good partner to our portfolio companies. I think we're hyperactive. I think there probably are some West Coast folks that are not as active as they wish they were with East Coast companies, and East Coast firms that feel like they're not as active as they want to be. You know, we personally try like crazy to be the very best partner we can be. But you know, we've seen it work well. We were the Series A investor in Oculus down in Irvine, California. We were very active. Like it's not a I don't think it's a point where we feel like it's a real issue.
Well, I think, you know, so going back to Don's sort of notion of within biking distance, I think it helps to be local. I think it's a local business in the sense that if you want to be a partner with the entrepreneur, especially in the early days, you know, you want to be able to be at certain meetings and they can just call you in, whether it's a, you know, sort of brainstorming on a product meeting or just helping recruit an executive. Those things are a lot harder to do if you have to get on a plane. It doesn't make it's not like impossible. And some of us are from the West Coast. We flew here to be here. It's not impossible to do that, but the frequency at which you can do some of these things, whether it's to brainstorm on a product vision or to talk to an executive that you really, really want to hire and close, those are just a little bit harder to do. Maybe you can still do it. You can do it on the phone. You can do it on video conference. But it's not the same as being within biking distance, or we've changed that to driving distance now.
Is that a reflection of any change in the way that VC works now? I mean, there's so much more talk about the operator VC and sort of, you know, which Don actually was an operator, so that was sort of, it started there, but then it shifted to, you know, more sort of Wall Street people becoming VCs, and then now there's really more like, if you're going to be a VC, you should have started a company or led a company for, you know, X number of years. Do you think that, you know, is the operator VC model, is that anywhere related to the local thing?
You know, it hasn't changed our business model at Sequoia for 42, 43 years, so I can't really comment.
Yeah, go ahead, John.
Just my sense is it's hard to get a real feel of the company if you're not there pretty often. And I think every company is different. I think every founder is different. I think every CEO is different. Every investor is different. And so for me, you know, some of the companies I'm involved with, I talk with every day on Messenger or whatever. Sometimes some other companies I get to come see every week or every few weeks. You know, I just think it's all about the pace and the pattern. It's about pacing and trying to figure out how to be helpful in a way that's natural and native to the company. And I think it's easier if you don't have to get on a plane to do that.
Yeah. So I want to talk about something I feel pretty strongly about. Why are there no women in VC? Like, why are there no women partners at any of your firms?
Yeah, it's a problem. I think it's a real problem. You know, it's something we've talked about a lot. We continue to talk about it. You know, we think it's a complicated issue because it's so blatantly obvious. And, you know, our answer is, you know, we want to find the very best people we could find. We keep talking to different folks for whatever reason that hasn't happened yet. I hope we, you know, make a change there in the near future.
I mean, is there any pattern there that's happening where you are talking to some of these women who could, you know, take the VC position and then they choose not to, or they go like towards founding a company, or?
Yeah, for us, I mean, it's first of all, we don't hire that many people. I mean, we've been around since 2005, and we have there's 8 of us, right? So it's not like we've hired 80 people and like, you know, so it's not that many people to start with, and these are people that I've known, and for whatever reason, we have gotten close before, and it just didn't make sense. But like, it's not something look, I've got 2 daughters. Like, this doesn't feel like good to me. I mean, we need to fix that.
Yeah, I'm not going to make any excuses. We've tried to. We need to do more, and we've done things in terms of initiatives that are trying to get more women into tech, whether it's She++ or organizations like that. But we'd still have to wait 20 years for that to happen. There are plenty of women in tech today. We need to do a better job, and we have some initiatives on the way, and stay tuned.
Yep, same thing. There's no excuses. It's got to be better. You know, we think about it and talk about it a lot. I think the short-term things, you try to find whoever you can that's really good at the role, and I think that women have traditionally been underrepresented in the tech industry, but like Alfred says, I think there are enough. I think that there are things you should do and people are doing around, you know, Stanford Computer Science. The introductory class is half women now, but the CS majors are more like 20%. So there's a real drop off, and it's very, very correlated with whether girls take computer science in high school or not.
We'd hire Shana, but she doesn't want to join us.
Yeah.
Well, you're a board partner at Andreessen.
I wish she did it with us. She shouldn't have done that.
You know. But I think, you know, it's definitely, the boring answer is that there's very few women in tech. There had been, now there are definitely more. Look, there's other minorities that are underrepresented in tech and in VC besides women, and that should change too. You know, I definitely believe it starts at home when girls are really young and treating them the same way you treat your boys, that they can do it, and they have to be intrinsically motivated and to learn technology in a way that's right for them. And I did find, you know, even when I was starting, I wanted to go to a fund, a bigger fund. You know, the jobs don't fall from the sky. And people, you know, actually were looking for a certain kind of person, which I don't think I am. And I think that, you know, people need to broaden their mind about like the type and prototype of person they're looking for, bringing a more diverse group into the fund. I think certainly it helps to have a really rich and varied background, because the experience you bring as an investor is a very important. So the more women get into the tech industry, the better candidates you'll have. But I think also you have for any women thinking about it, you have a huge advantage right now, because, you know, just being female and bringing a different perspective and a different methodology to the work is, you know, for me, it's been invaluable.
I do think we need to recognize like how unlevel the playing field is, though. You know, I think that a lot of us say, well, you know, we don't treat women in a discriminatory way or minorities in a discriminatory way, but I think the truth is the landscape is so unfair in such an invisible way. Heidi Roizen, who's been around the industry forever, and she ran Teamaker, a very important company. She was in Apple Developed Relations. She was at SoftBank Venture for a while, and she wrote a piece earlier that we should all read. It makes you almost want to throw up the way she was treated as an entrepreneur by VCs. And so I think that part of it is we have to come to grips with how unlevel the playing field has been.
I mean, you made a good point about like the way that the VC world views women. They want a specific type. And do you agree with that? I mean, do you think that maybe you guys have to kind of open your mind a little bit about what the career path of a female VC is, or the past career path would be?
Yeah, we definitely have a bias towards people with a technical background. That's true. And I guess your question is should that no longer be our bias? We tend not to get hung up on whether you've had an operating career or a venture career, because we've seen it work successfully both ways at our place and other places. But we definitely have a strong bias to having a technical background. We
do as well. Technical background, operating background. We don't tend to care whether someone's been in VC or not.
I think that part's going to get fixed pretty fast. We see more and more women starting companies all the time.
So I hope that when we come back in a year, at least one of you has a female partner.
I hope so too.
So Mark Andreessen, I'm just using this as an example, but he recently talked about, he sort of went on this Twitter tirade as he has been doing of late, about the ethics of apps that let you share anonymous content and, sort of his preference not to invest in those. Of course, we have both Whisper and Secret on stage here and Disrupt. But do you think it's the VC's responsibility in this current age to sort of stand in judgment of culture and what people are creating? And there's so much more to the tech culture than just, anonymous apps. There's the Google bus protests. There's a lot of the kind of backlash that we're facing.
Yeah, I mean, my own personal thing that we do is I tend to use this idea of would I ever want to work at that startup? That's kind of how I think about it. And I don't have a problem with the anonymity. I mean, Tumblr was an anonymous, it remains an anonymous service. But there are certain things that we just choose not to do, and a lot of it is just a level of comfort. For example, we haven't invested in a gambling site. I'm not righteous or judgmental about it, but we just feel hey, we're gonna make each of us a few decisions every year, and where do we want to spend our time? And it kind of comes down to a personal comfort thing.
Yeah, for us, we're backing an entrepreneur. We want to be in business with that person for the next 10, 20 years, hopefully, if the company is extremely successful. And we're looking at the values of that person as opposed to any specific value of the company. And there are great things that can come out of anonymity. It can be used for bad, but just look, we invested in Whisper, so you'll hear from Michael later with Ruloff. But there's a lot of rich content that comes out of being anonymous. You don't always want to be public all the time and have your identity attached to what you say. Sometimes you just want to, scream in a vacuum about your personal thoughts and not have anybody judge you on that. And I think there's powerful things that can come out of anonymity.
I personally don't have any issues with anonymity either, but I do think that, and I don't think this is a VC issue, I think this is all of us together. Technology is clearly becoming one of the dominant forces of our society, and it's affecting everything from health insurance and healthcare.gov to, what we watch on HBO to culture, to popular culture. And I just think it's incumbent upon all of us to figure out where we want to spend our time and for us to vote with our feet. And I think that, again, I don't think anonymity is good or bad per se, but I think that different companies have different characters and different goals in the world, and I think you should vote with your feet, investors and entrepreneurs.
Yeah, I think that this is, sometimes investing, you have so many options. I think what people bring to that is like a framework, and sometimes the framework is your opinion of what you'd want to see in the world. And people should make that clear when they talk to new founders, like, this is my framework, this is what I want, this is what I want to have in the world, that's why I like this deal. I actually try to remind my founders how subjective the fundraising process is. Like, who are you talking to? What deals are they doing? How many boards are they on? Where is your company? Do they want another company in that area? What's your sector? Do they like that sector? Did they just sell a company in that sector and they want a new one? Like, there's so many, there's so much of a map that you have to put together. And, personally, I feel very strongly about some of those issues, and I definitely wouldn't invest in some of those. So, but that's me. And, you're looking for two things that make a lot of money and become billion-dollar companies, and things that your instinct and your judgment is telling you, this is a good deal for you. So, you put those two things together, and when founders talk to investors, they got to know, where do they stand and why are they doing this deal? Just the same way you want to know from a founder, why did you create this?
So let's talk about this valuation bubble brouhaha that's happening. In 2008, Sequoia published this infamous PowerPoint presentation, RIP Good Times. So I'm going to ask Alfred, do you think the good times are back?
I think good times. Things go in cycles. Business cycles happen. I think we're in an interesting cycle right now. You and I talked backstage about some of the high-flying stocks coming down and having bad days yesterday. I don't really look at the stock market from day to day, but the Nasdaq is still up from last year. Maybe the last few days are bad for each individual stock, but things are generally pretty good. The economy is still growing. Are you specifically about valuations? I think I'm not a public market investor, but I think part of the drop is there's a kind of a shift from unprofitable growth to people caring a little bit more about profit. So, as people investing on the much earlier side, we always tell companies to invest in your company and keep growing if the unit economics make sense for your company. And I think there's a valuation, so Fred talked about the valuation trap, and look, great companies will get into that trap because they want to be great companies. There's no other alternative than to go public because they want to build an independent company, and that's fine. That's a good thing. And I see that the great companies, the money accrues to the winners right now. And in the internet, winner doesn't take all, but it takes more than most now. And that's why you have all the dollars chasing number one and number two. The only reason you would back a number two is because you think there's some way that they can become number one. But number three, number four, number five tends to be irrelevant. And so as people who are trying to sort of place back and be partners with these great companies, there's only a few choices in this side of the internet.
So it's highly competitive, and
it's highly competitive.
Someone's going to give a higher valuation.
Yeah.
What do you think?
Well, when I had my company before Mozilla and before I did this, I think I closed my round on March 10th, 2000, which is the top, the very top of the Nasdaq. And the guy who was doing the investment was a guy named Peter Fenton, who's at Benchmark now. He was an associate at Excel then. And I remember him saying, "Man, the window is going to shut and the valuations are going to come way down." And as a guy who just closes A, I'm like, how the fuck can that possibly matter? Like what? Like I've got 30 people in my company. How can public market valuations possibly be relevant to me? Because it's going to be so many years until it comes out. And now as an investor, what I realize is that as you're justifying things, you're trying to talk about how to get to be billion or multi-billion-dollar companies. You're trying to figure out ways to justify that, and a lot of times it's the public market comps, because those are the only things that are really public, and this is 40 times revenue or 30 times revenue or earnings or whatever. And so I think that it takes a little while to work through the system. My sense is that the tech sector of NASDAQ is going to be a little choppy for a while. Like for the long term, it's clearly up and to the right as far as you can see, but it's going to be choppy for a while.
So are the public, tech stocks are really taking a beating over the past few months. Is that, you think, going to correct some of the valuations that are happening right now, at the late stage or even in, mid stage?
Yeah, I mean, look, I think there's a way to look at this with a jaundiced eye and say, you know, valuations are taking a beating, hedge funds are doing Series B financing. I mean, I could probably list 10 things why, like, you know, actors are doing investing, like a lot of reasons why, you know, we're headed for hell. But like many of us lived through Web 1.0, that was a nightmare. I mean, we had like 1 million broadband users, you know, $100 billion of venture capital being deployed, you know, no business model that would ever compile, like ever. And like, that's not what we have today. You know, I think it's funny, like we're talking about these kind of like stocks that are getting a hit, but if you look at kind of like where they are as a multiple, they're like still amazing multiples. And let's say they get hit again and again, they're probably still amazing multiples. Like these are companies that are generating real revenue and, you know, growing and adding value in this world. I'm much more optimistic. You know, having said that, you know, our view is we just kind of have a steady approach to the pace. So we are not like blowing out a fund in 11 months. I think, you know, in the 9 years we've been in business, you know, our pace is basically like 2 investments per general partner per year in good times and in bad. Yeah. And that's kind of how we do it. And if we're wrong about like it's too frothy now, we'll figure it out next year.
I'd also point out that every time people have said it's a bubble, it's frothy, some of the best companies get started during those times. So, you know, Zappos was started in 1999, so was, in that time, 1998, 99, there was Google, PayPal, OpenTable, Salesforce, you know, so there's a whole list of companies that come out of quote-unquote bubbles, and a bunch of companies also come out of really bad times as well.
I think one thing that's become clear is that you can grow users really quickly, you can grow top line really quickly, you can't go profits that as quick generally. And I think it takes a lot of time to build companies now. And I think that the cost of building companies, actually the cost of starting companies is low, but the cost of building these breakout companies, the costs are massive.
Yeah.
So they have to raise hundreds of millions of dollars. The costs are really high. Now, there are definitely exceptions, and I love when an exception comes along like WhatsApp, when you look at that cost structure and you're like, oh my God, that's obviously the holy grail. But so there are exceptions that emerge, but in general, if you have servers, if you have bandwidth, then the demand is always going to exceed the availability right now, and even though the costs are lower, if you have 100 million people that are coming through or approaching that, you have massive costs, so you have to raise the money. So that's why you have these very aggressive rounds that take place, I think, on the later stages.
Even within a year of raising capital.
Because you have costs. And I think that's why I love looking at infrastructure and ideas that can really bring down the cost of infrastructure by radically changing how servers work, anything that's in that area, because if you're one of those big scale sites, you just have a lot of costs. So I think we've seen that with some of the...
But it's a combo of what Shana said and what Alfred said, which is cost you need to raise, but the winners, the things that look like they're winning, you'll have
high
money.
competition.
Yep.
Yeah.
Well, that's all the time we have for today, but thanks so much for joining us.
Thank you.